Hi everyone. While Nvidia has long provided the GPUs that AI training relies on, discontent is brewing. Sam Altman is seeking a staggering $7 trillion to address current scalability limitations, which would reinvent AI chip development and the semiconductor industry as a whole. How exactly does Nvidia's approach fall short? What technology or infrastructure could possibly demand such an enormous sum? Keep watching to learn more. This video has 3 parts: why $7 trillion, geopolitical concerns, and AI hardware renaissance. Part 1. Why $7 trillion? It's been all over the news the past week or two. Sam Altman, the CEO of OpenAI, has been seeking lots of money to build an AI chip venture, where lots of money is between $5 and $7 trillion. Let's put that into perspective for a moment. In 2022, the US federal budget was $6.3 trillion. So this amount of funding could exceed the entire US federal budget. And also, incidentally, the GDP of Japan, which is about $4.23 trillion. In fact, even putting specific countries aside, that's about 7% of the global GDP. That's simply an enormous sum of money. It's also primarily a dig against Nvidia, because Nvidia is the primary supplier of AI chips right now. So predictably, the Nvidia CEO downplayed this. He spoke to a Middle Eastern audience, the same people that Sam Altman was seeking the funding from, and the Nvidia CEO said the current data center infrastructure across the whole world, the installed base, is about $1 trillion worth. And he predicted that the world would need to build another $1 trillion worth of similar infrastructure over the next 5 years. So first of all, a doubling period of 5 years might seem a little slow because of the pace that AI is currently developing at. But of course, building and deploying hardware infrastructure does take a long time. Keep in mind as well that Nvidia is the incumbent here. They want to uphold the status quo, because the status quo is everybody paying absurd sums of money for Nvidia GPUs. In fact, purely as a result of the AI boom and subsequent demand for Nvidia GPUs, Nvidia's stock price tripled last year, and Nvidia is now more valuable than Amazon. I actually don't know if that will be true by the time you watch this video, because the valuations are constantly moving around a little bit. But yeah, Nvidia is now valued at about $1.8 trillion. So hearing some of these numbers, like $1 trillion of infrastructure or Nvidia worth $1.8 trillion, means that 5 to 7 trillion doesn't sound quite so outlandish, but we'll go into that in more detail. It's worth noting that this is not the first time that Sam Altman has sought funding to create a chip venture. In fact, right around the time that he was being ousted as the CEO of OpenAI, temporarily as it turns out, he was actually seeking billions of dollars in funding for a chip called Tigris, which didn't exist yet, but which was supposed to eventually compete with Nvidia. And he was seeking that funding from the exact same people that he is now asking for trillions from, investors in the Middle East. So why did he raise the amount so much from billions to trillions? Well, he's in a stronger position now because he's really consolidated his power over OpenAI, which is no longer this sort of hybrid between a nonprofit and a for-profit company, but rather is basically just an ordinary tech startup at this point. But I do think that it's a fully honest pitch. Sam believes in the power of trillions of dollars to reshape the semiconductor industry. And for some reason, he thinks that's necessary, which again, we'll go into more as this video progresses. Apparently, Sam Altman has been taking a bit of a beating over this news because the figure of trillions sounds too outlandish to everybody. And after a week, he quietly pulled back a little bit, and news sites are reporting that he privately told people that the figure represents the sum total of all the investments that would be needed in everything from real estate to power to designing chips and building fabs over a period of years, which only makes sense. You couldn't burn through trillions of dollars that quickly. The mythical man trillion wouldn't let you. My analysis is that it's a bet on long-term transformation and a bet on exponential growth. If Nvidia thinks that data centers will grow relatively slowly, doubling over 5 years, Sam Altman's bet is that we're at the early stages of an exponential and that we will need to grow much more rapidly than that. And I think that even if AGI arises in the interim, it's a project that would continue because AGI and more sophisticated AI would also like a massive venture into producing technology that's useful for AI. As for why Sam might be looking for this money from the Middle East, which doesn't really have any semiconductor manufacturing capability right now, it's because the Middle East is one of the few places in the world that could write such a check. In fact, putting aside private venture, even a lot of governments couldn't afford to write such a check. Again, for comparison, the Apollo space program cost the US about $300 billion in today's currency, while Biden's clean energy plan is going to cost more than originally anticipated, about $1 trillion over a 10-year period. So basically, Sam Altman is trying to get private equity to play at government policy. And the Middle East, because of all the oil that they've dug up over the years, has a massive concentration of funds in sovereign wealth funds. It's a very secure source of financing, which would be necessary to make such a massive project succeed. And from the perspective of the governments in the Middle East, I'm sure they would like to diversify their economy beyond reliance on oil and gas, and bringing the most high-tech of manufacturing right to your doorstep is a great way to do that. This is a project that could only work in the Middle East, or potentially somewhere with a lot more government assistance instead of just private funding, and even then only from a few of the wealthiest countries in the world. Part 2. Geopolitical concerns. What's wrong with the status quo? Why might Sam Altman be trying to disrupt that? As you might have guessed, because there's so much money and power involved in being able to produce advanced microchips. Chip production is an intensely geopolitical venture. Let's talk about the present. Right now, advanced chip manufacturing happens in exactly one place in the whole world, in Taiwan. There's one company there that has a virtual monopoly, TSMC, or the Taiwan Semiconductor Manufacturing Company. The history of TSMC is fascinating, and I'll include a link in the description if you'd like to read more. Probably I'll talk about it more in another video. But just for quick numbers, they have about 59% of the total market share of chip manufacturing in the world, but probably capture about 80% of the total revenue because they produce the most advanced chips. And to make this production work, there's a global supply chain that includes IP from the US, equipment from the Netherlands, assembly in China, other parts produced in Vietnam, etc. This global supply chain is very brittle, which has led to supply chain shortages due to pandemic shocks and other reasons. As tensions are increasing between nations, especially the US and China, a lot of countries are trying to create their own chip manufacturing capabilities. In the US, for example, there's the CHIPS Act, which is trying to reshore chip manufacturing. But let's pause for a moment and ask, how did this situation even arise? After all, globalization was an American idea from a world where the US dominated all military and economic matters and could shape relations between all the countries in the world. Right now, the US doesn't like that it's so dependent on Taiwan for advanced chips because Taiwan is so close to China and at potential risk of being invaded. But this is an artifact of a system that the US itself created. Let's break it down. One of the fundamental building blocks of economic foreign policy is tariffs on trade, which basically means when you try to import something from another country, then the tariff will apply and they'll charge like 20% tax on it or whatever the number is. Tariffs were much more common historically as a way for a country to protect its own domestic industries. They were also an excellent way for wealthier countries to block imports from less advanced economies, thereby making sure that those poorer countries didn't evolve those advanced economies in the first place, until these wealthy countries had a great idea and realized they could export their IP laws, their intellectual property laws. What does that mean? Well, intellectual property laws are basically copyright laws, trade secret laws, patent laws, that kind of thing. And they prevent one person from illegally copying or profiting off of someone else's work within a country's economy. But until recently, most countries had their own IP laws, which is why, for example, multinational corporations would always have to file for a patent in tons of countries around the world, because just because you have a US patent doesn't necessarily mean that in Europe you're going to have protection from competitors copying that product. So you kind of deal with it by putting tariffs in place and focusing more on a domestic market. But the US decided to introduce this concept called free trade, which sounds great. It has the word free in it, and it means no tariffs, essentially. Free flow of goods across national borders, which sounds great, except that if intellectual property rights are not carried across national borders as well, then as soon as someone files a patent in the US and starts creating a cool new widget, there's nothing stopping someone in a different country from just copying that, blatantly copying it, and then selling it back into the US market. Or even if the US blocked that, selling it to a third country. The UK loves buying cheap widgets, for example. So the US spearheaded a series of free trade agreements, starting with NAFTA, which included all of North America, so Canada and Mexico, and then a World Trade Organization agreement in 1999. This agreement took down all the tariffs and said you have to respect intellectual property law, specifically US intellectual property law, which meant that companies, for example, American companies, were free to take their intellectual property, export it to a much cheaper third world country, and build factories there, and so on, which had the added benefit from the perspective of the advanced economies in the world that the majority of the profits would still stay within the advanced economies. The people that were creating the intellectual property were the ones reaping the vast majority of the benefits, while everyone else just got really terrible factory jobs. This was the root cause that led to a lot of really brittle supply chains, such as the ones in the semiconductor industry, including Nvidia's own supply chains. I want to pause and offer a book recommendation now, and the book series is called The Interdependency. It's science fiction where a bunch of different systems have specialized in producing very particular types of goods. In fact, they have an empire-granted monopoly over the production of certain goods. And yes, all these star systems enforce each other's intellectual property. Anyway, in that series of 3 books, a massive catastrophe starts to befall all the star systems, and they start getting cut off from each other in terms of communication and in terms of shipping. Yes, it's an analogy for a highly globalized world, one that is very prone to shocks to the system. John Scalzi, the author, actually said so. Anyway, check it out if you're interested. The first book in the Interdependency is called The Collapsing Empire. In addition to these issues with globalization and brittle supply chains, semiconductor manufacturing actually has an additional problem, and that problem is monopolies. For example, Apple can block all other companies from accessing the most advanced microprocessors by simply pre-purchasing the entire production supply of TSMC. And they do in fact do this. The thing is, the monopolies don't want any of this to change. TSMC loves being the only producer because they can set prices. AMD, Nvidia, Apple, they all love being such heavyweights in their industries that they too can set their own production goals, set their own prices, and not really worry about upstarts coming in because the upstarts can't access an alternative to TSMC. The problem here is the companies trying to extract maximum possible profits without much regulation. And like most monopolies, a lot of these companies are not really spending their money on innovation. They're spending it on stock buybacks and dividends so that the shareholders feel really great about the company, because that's the logical thing to do if you're a monopoly. Make sure your shareholders and the legislation that affects you are all in your favor. In the words of Cory Doctorow, the CHIPS Act treats the symptoms but not the causes, because globalization itself doesn't cause all these problems. It's globalization combined with monopolies, combined with shocks to the system. And until now, we haven't had shocks to the system, so it didn't matter. But we're going to keep having more and more of those as the climate crisis evolves and so on. The CHIPS Act and most of the public are thinking about going after globalization, which also makes sense if there's going to be wars or other unrest. But they're ignoring the monopoly part, which is actually the easiest part to deal with. Well, not easy, because the monopolistic companies are going to fight you every step of the way. But all it takes is legislation, breaking up the companies or putting in place rules about how they act and how they use their money. For example, the production of DRAM, or the memory that goes into computers and phones, is also extremely complicated. Not quite as complicated as producing really advanced CPUs and GPUs, but very intense nevertheless. And DRAM manufacturing is a highly competitive space. If you buy a new device, it might have memory produced by one of half a dozen or more different companies, which are located in different geographic jurisdictions. And when incentives come their way from the CHIPS Act, those companies are actually doing research and building fabs and so on. Because if they don't, they'll lose the competitive edge to other companies that are in the same space. But in semiconductor manufacturing, Apple, who's one of the worst offenders in this regard, has literally no reason to take any chip money at all and do anything. They'll just keep paying TSMC. The more things change, the more they remain the same. A lot of this section, by the way, was based on research done by Cory Doctorow, so I'll link his article in the description below if you'd like to read more about it. So as you can see, there are a lot of issues right now with the semiconductor industry, from globalization to monopolistic behavior to companies that are probably thinking about doing just what they've always been doing. Grow slowly, keep making GPUs. That's what Nvidia is thinking right now. But if we're truly on an exponential growth curve, curve, as Sam Altman must think we are, then another approach might be required. An approach that costs trillions. Part 3. AI Hardware Renaissance. A multi-trillion-dollar investment into AI hardware would certainly create a lot of new ideas and a lot of new capabilities. It would allow an almost complete redesign and a re-architecting of a lot of the assumptions that underlie current hardware. For example, current AI accelerators try their best to fit into existing standards. For example, GPUs slot into the PCIe interface inside standard motherboards. This restricts them to certain power consumption, to certain memory bandwidth, which is important because those things have to be co-designed with motherboard manufacturers and CPU manufacturers. But that's because we're just thinking about a computer as having a CPU, having a motherboard, and having GPUs. As we think about investing more and more into this hardware, it can become more and more specialized and dedicated. I dug up a few interesting examples. There's a company called Cerebras, which has produced two systems, CS1 in about 2019 and CS2 in 2021. CS2 uses what they call WSE2, or the wafer scale engine. Wafers are those really big circular discs that they produce microchips on. And typically, a wafer contains tons and tons of instances of the same CPU or microchip architecture. This is partially because it costs many, many thousands of dollars to produce one silicon wafer, and partially also because every wafer has a certain number of defects in it. So if you produce a fairly small chip, then the chance of having defects is low. But what Cerebras did is they made the chip the entire size of the wafer, which is pretty insane. A small number of defects and you probably have to throw away the entire wafer. Most likely, they designed a certain amount of redundancy into the chip so that if there's defects in certain areas, you can just disable certain regions and get slightly fewer cores. That's a fairly standard precaution for CPU design these days. Anyway, these wafer scale processors are specifically designed for AI. And because they're so huge, they have 850,000 cores. That's right, it's not like a 4-core computer, it's like an 850,000 core computer. For comparison, an Nvidia A100 has about 7,000 cores in it, and an H100 has about 15,000 cores. These are specialized cores, like GPU cores or AI cores. They need far less silicon than CPU cores do, so you can get to much higher numbers. But still, 850,000, that's insane. As one commentator said, it's one of those products that if you have to ask, you can't afford it. It's the largest chip ever built, 2.6 trillion transistors, and a surface area of 462 centimeters. Assuming it's square, that means it's 21.5 centimeters on each axis, or 8.5 inches if you live in the US. Let's see, wait a minute here. There you go, 8.5 inches by 8.5 inches. Pretty big for a CPU core. It seems the company Cerebras plans to rent computers containing these CPUs for about $1.6 million per year, and they certainly cost millions of dollars to buy outright. I don't know the exact cost. Just to mention as well, this company produced these insane chips in 2021. So if you have a few $1,000,000 burning a hole in your pocket, you can probably get them today. And the company is thinking of going public in 2024. So these Cerebras chips would almost certainly be used for model training, not for inference, which I think is Sam Altman's primary consideration as well. So you could imagine a world where Sam Altman would invest a lot in this company or license their technology or something like that. I found another company that is focused on model inference, and it's called Tachyum. Tachyum was trying to produce a 96-core processor. This processor, called the Prodigy processor, seems a lot more like a CPU to me, which is why it has a lower core count. And that CPU would be paired with 1 terabyte of RAM and put into a standard ATX motherboard. It would probably only cost like $10,000. That's my guess. The company says $5,000 right now, but that doesn't really add up. Tachyum designed this system specifically so that it could actually take a trillion parameter model and run inference on it. Remember, we think that GPT-4 has about 1 trillion parameters. It has some special 4-bit floating point data type. I don't know the details, but that lets them cut the memory use in half from floating point numbers that are 8 bits. And that's how they think they can fit 1 trillion parameters into 1 terabyte of memory. However, Tachyum's ability to deliver on this promise is in serious doubt because they were originally going to release their processor like 3 years ago or 4 years ago, and it keeps getting pushed. probably keeps getting changed as well because they want to be able to do inference, at least theoretically, do inference on the largest models on the market. Not to be outdone, the big tech companies are also getting involved in all this AI chip production. Google was actually the first company, as far as I know, to make special purpose AI chips. They created tensor processing units, or TPUs, for their cloud systems in 2018. I remember that announcement when it happened. And now my Pixel phone has a processor inside it that has some special tensor cores. Microsoft is producing 2 new chips specifically for AI training for its cloud, for Azure. Nvidia is going to just keep doing what they're doing. And like I said, they're about as valuable as Amazon now, so it's working for them. And AMD is the closest thing Nvidia has to competition. But the biggest problem with AMD GPUs is not the actual hardware. In fact, they're often more power efficient and arguably better designed than the Nvidia ones. The real problem is that AMD doesn't control the entire stack. All the software is built on Nvidia specific things like CUDA. So unless AMD makes hardware that's much better than Nvidia's, no one's going to take the time to change that software stack. So they're playing from behind, basically. And I think that's also part of the reason that Sam Altman is thinking this has to be a really big investment, because you have to design the chips, you have to build the fabs outside of Taiwan, you have to maybe replace the motherboard or the CPU with equivalents, you have to build data centers, get electricity for those data centers, you have to rebuild the software stack that actually runs in those data centers. There are so many moving pieces that have to be addressed. Or I guess you could force Nvidia to standardize a lot of its stuff. If AMD and OpenAI could all produce NVIDIA compatible GPUs, then that would solve a lot of problems. But good luck getting NVIDIA to agree to that. Actually, it's not just AI chips that are experiencing a bit of a renaissance. In addition to Intel and AMD, which have produced CPUs for a long time, Qualcomm and Nvidia are both producing desktop CPUs. They're based on ARM, not x86, but they're going to be legitimate competitors to Intel and AMD. The days of going to a Best Buy and seeing every laptop with an Intel chip in it might be over. But like I said, that's a really good thing. There's too much consolidation in the microprocessor market. Competition will force those firms to spend their money wisely, at least in theory. And if not, well, all it will take is $7 trillion of investment to get a viable alternative. Finally, I want to note that if Sam Altman is seeking $7 trillion of investment money, that means that those investors would expect to get a return on their investment, which means that he would expect that venture to be worth many times $7 trillion. Which is insane. If it grew to 10x its current value to 70 trillion, that would be about the size of the entire GDP of the world today, which means that if there's any financial sense in that type of plan whatsoever, that AI is about to truly transform everybody's lives. Imagine spending 50% of your salary on AI-focused stuff. That might be the world we're about to live in. Finally, in conclusion, we talked about some of the implications of Sam Altman seeking $7 trillion in investment to build out semiconductor manufacturing. Specifically, trying to create AI chips that don't suffer from production bottlenecks and the monopoly behavior of Nvidia. We also talked a lot about the geopolitical reasons that globalization and monopolies like Nvidia or TSMC have arisen in the first place. To be clear, monopolies are a natural result of a capitalist market, but the government is supposed to initiate antitrust lawsuits against companies that actually become monopolies. That's what ensures that competition arises and keeps everybody operating efficiently. But antitrust becomes a little more difficult when your government is strongly deregulated and when your company's activities are spread all across the world because of globalization. Finally, we talked about the AI hardware renaissance that seems to be unfolding. There are tons of startups out there that are trying to create different AI chips or AI hardware of one form or another because everybody knows it's such a huge market. But nobody really thought that it was as big as Sam Altman, I think, before he started making these pitches. It will be interesting, to say the least, what happens. I think it probably depends a lot on how much of the exponential growth curve that we'll be experiencing on data and models will translate into exponential requirements on hardware. Maybe we'll just double the number of data centers over 5 years, or maybe our economy will become half AI focused. $1 out of every $2 spent on AI models and AI infrastructure. If you liked this video, check out this previous one I made where I did a much deeper dive into how GPUs work and why they are the way they are. It's a bit technical, but it has some fun anecdotes as well. All right, that's all I have for today. Thank you very much for watching. Bye.